talk to cloud accountant, MYOB. Well, some sobering news for resources firms today, with PwC circulating the industry has suffered $200 billion in impairment charges over 5 years. That means most of the value created in the last boom has now been written off by the majors. Well, despite the gloom around the industry, there are some signs the next boom may have already started. Commodity prices have recovered from their February lows, share prices have surged, and investors are throwing money at previously unloved explorers. Neil Woolridge reports.
In the desert scrub outside Broken Hill, a few never-say-die explorers are hard at work, hoping for the next big discovery. Out here, the great mining boom of the 2000s is a distant memory, but hopes are high that the next upswing has already begun.
We've got money in the bank, we've got an active drill program, it looks like we're getting some good initial results, and it doesn't get better than that until you drill the big one.
Impact Minerals is a small explorer with projects near Broken Hill and Dubbo that are showing early promise. Andrew Forrest is a major shareholder, and the company recently raised nearly $2 million from investors without breaking a sweat. While resources stocks have been battered and bruised for the past 5 years, Impact Minerals' Mike Jones says optimism is starting to return, especially among mining minnows.
Our office is in West Perth, and there's been a definite change in the walk of people in the street just in the last 2 to 3 months. Most of us are out there, we're genuine explorers. We've been struggling to survive over the last few years, and now money and life is coming back into the business.
And there are tangible signs on the market as well. The Australian Materials Index has gained 30% from its February lows, capital raisings have increased, and now companies are preparing to list on the stock exchange.
There is several deals which are in the wings, and the quality of them looks quite encouraging as well. They're not just a listing of an explorer, they're listings of things which look like quite reasonable mining businesses.
Fund manager Hedley Widdop says graphite and lithium have been resources to watch as they both supply the growing battery industry. But gold has been the standout, with shares in local producers surging 60% this year.
There are a lot of companies, there is a lot of gold which is mined and sold, and gold enjoys fabulous margins at the moment. So there are close on 50% margins in some producers at the moment, which is unheard of on a 15 to 20 year time frame.
And he says even though most commodity markets remain oversupplied, there's still an appetite for new discoveries.
Look, if you find an interesting nickel or copper deposit now, there's going to be some people who are very interested in it, particularly some of the majors which are dealing with deposits which they would like to produce more from, I'm sure, but they would like to look at something new if it's higher grade and easier to access.
But Australia's two biggest exports, iron ore and coal, remain in a funk. While export volumes have increased significantly, prices for both companies and the underlying commodities look to be stuck near post-boom lows.
The bulks, coal, iron ore, are still struggling, I think, with the demand perspective for both of those. And for that reason, I think some of those businesses are cheap, but cheap for a good reason.
Iron ore enjoyed a 75% rally from late January to April. But since then it's fallen 27% to $50 a tonne and looks to be stuck there.
To have a sustainable price rise in iron ore from current levels, given that global growth is quite subdued, is an unrealistic expectation. So an iron ore price between $45 and $60 seems quite a reasonable broad range.
Impact Minerals' Mike Jones says thousands of jobs were lost as the big miners like BHP Billiton and Rio Tinto closed their exploration programs. But he says it's a decision they may regret.
I'm sure that over the next couple of years the majors will realise yet again that they should have kept exploring during the downturn, and will come to the support of the juniors and look to take over companies that have got promising discovery.
Whether this is the start of a new mining boom is yet to be seen. But whatever happens, the next boom won't be anywhere near as big as the last one.